Hi, this is Akshay Shrimanka, a CEO and founder of Shea CPA. I thought I'd record this video to go over some tax tips for your tech company to think about this summer. We are 4 months away from the end of the year, and 2020 has already been a roller coaster. And I thought, I'll just go over a few tips that I think founders could find useful before the end of the year. So, first one is uh, convertible note conversion. So if you're a founder of a tech company with convertible notes, and if anything is converting over in 2020, a great idea would be to collect W-9s from all of your investors, as you will need to issue them 1099 interest statements before the end of the year. And getting them prepared for this now is probably best, since they will have to report this income on their personal or their business tax returns, especially if they're angel investors. They may have to report that interest income on their personal returns. So collecting that information now is great, so that by the time when you have to issue them next January, you don't have to chase up after anyone. Did you pay any contractors outside of the payroll system you use? So many founders use Gusto or JustWorks, and sometimes you may be paying some of your vendors outside of those systems, which means that those systems won't be issuing the 1099. So it's a good idea now, again, collecting W-9s from those vendors, and then you could either issue the you may have to enter that information into your payroll system, or have your accountant work on issuing the 1099 before at the end of the year, so in January of 2021. R&D development, R&D credit. So there is a research and development tax credit that could be worth up to 10% of qualified expenses, and that could offset payroll taxes. So for tech companies with significant burn and significant amount of investment into research and development, this is a really valuable tax credit, and it can offset your payroll taxes each quarter, and that will save your company money and limit burn. So I definitely recommend taking a look at that area. We can help perform an R&D credit study if you need assistance with that. So just let us know. The next thing is many founders took on the PPP loans, and for tax purposes, those are going to be non-deductible, not deductible. So those need to be clearly identified in the accounting system. So what we're doing with many of our clients is, with the accounting system, is we're tracking and tagging expenses that were allocated towards the PPP and some of the other loan programs like the EIDL. So it's something that you need to do in your accounting system. NOL rules, so net operating losses. So some of the C corps we work with actually have profits in prior years. So let's say the first year in operation you got started with a grant, or maybe you had a successful Kickstarter campaign and you hadn't raised money yet. You may have actually paid some corporate taxes, when you first got started. So it's with the CARES Act, you can now carry back those losses to the past 5 years. So if you have net operating losses you've generated, you can carry those back. So it may be good to take a look at the returns you filed previously and just see whether there was any corporate taxes you paid on the federal return. And if you did, speak to us about how to get some of that money back, because you can carry back NOLs. Nexus and multi-state allocation. So I think most tech founders we work with, they're really big on having distributed teams. When COVID hit, for a lot of them, it was pretty much a next day transition. People were able to work from home pretty seamlessly, and it wasn't the end of the world for many tech founders and their teams. So, but what ends up happening here is that it could open up a can of worms as far as residency and where the company has nexus. So, which is like where ultimately your company will have to pay taxes, payroll taxes, and sales taxes. So, this is another area that you want to look at to see, okay, where is my team at the moment? Are they distributed across the US? And what type of exposure does this expose the company to? Do we have filing requirements in different places now as a result? Some states have sort of issued guidance that is favorable to both the employee and the company as far as Nexus goes. So there is some leeway that some states have had, but some states haven't said anything. So it is something that you need to look at with your advisors. And then for other tech founders, this may be your last year in operation, and you may be closing the business, you may be selling the business, and there is a lot of tax considerations to factor in. So it's a good idea to speak to your CPA or attorneys about what needs to be done when you're getting ready to shut down the business. And we're definitely here to help you if you have questions about that. So yeah, that's just a quick rundown of the blog post, and feel free to contact us if you have questions. Thanks.